welcome to a new episode of Chat and Chart. This is the London session open. This time is a bit different. This is recorded because I won't be available at the time of the session. So I decided to record it for you guys to prep you for the week ahead and make sure that you know what's going to happen next week in terms of fundamentals, in terms of news. And of course, we'll go through the charts as always to see or to form a bias for the week. But this week we have many data points that are getting released for the month of November, which are very, very important. So we expect high volatility during this week. And of course, we expect not only because there are many data points, it's also because we're like approaching the end of the year and liquidity is getting thinner and volatility is getting higher and higher, or it's becoming bigger and bigger. So that's why be careful and make sure that you manage risk, or even if you insist on trading, just like cut your risk in half minimum, because volatility will be real in this coming week and the week after. Anyway, so let's start as always with the weekly high impact news calendar. We start with Monday. Monday we have nothing of high impact, so we move directly to Tuesday. Tuesday will be a very big day. We have the 1, 2, 3, 4, 5, 6. We have 8 data points coming from the US. So we have the average hourly earnings. We have the core retail sales. We have the retail sales. We have the NFP for the month of November, and we have unemployment rate also for the month of November. All of these data points will get released at 5:30 Dubai time, which is at NYSE open. So it will be very volatile. Be careful of that. And after those releases, like 2 hours after, we have S&P Global Manufacturing PMI and we have S&P Global Services PMI. So we have the manufacturing part and the services part. Now, you need to trade very carefully on Tuesday and around those news releases, because the volatility will be real. Then we move to Wednesday. Actually, wait a second. Before we move to Wednesday, let me explain why the NFP is coming or getting released on a Tuesday. Because in the past week, like because of the government shutdown, a lot of data got delayed. So this time, it coincided with the Fed. So the Fed had their, what's it called? They had their meeting or interest rate decision like a few days after when it should have been released, which is last Friday. So usually the NFP gets released on the first Friday of each month. But because of the government shutdown and because of the delay in market data, they decided to announce it after the Fed makes the decision of cutting 25 basis points. So that's why we're seeing unemployment and non-farm payroll on the same day on a Tuesday. So that's not the norm, but this is how it's going to happen this week. Then we move to Wednesday. We have CPI coming from UK. Which is still elevated in my opinion. We have the CPI coming from the Eurozone, which is slightly higher than their target of 2%. So it's the previous is 2.2%. The forecast is 2.2%, so no change. They're very close to their inflation target. So this number, as long as it's as expected or below, they're okay. If it comes in hotter than expected, like higher than 2.2%, we might see some strength on the Euro USD, because it means that they will need to keep rates higher for longer. And then finally, we have the crude oil inventories coming from the US. That's it for Wednesday. Thursday, we also have a big day. We have the Bank of England interest rate decision. They are expected to cut 25 basis points. So the previous rate was 4%, and the forecast is 3.75. So the markets are expecting a 25 basis point cut. So if that cut comes, that could boost the economy in the UK. and we saw the GDP, like the UK's GDP is struggling at the moment and it's contracting. So I think cutting rates would be the smart thing to do now, and even not 25 basis points, a 50 basis point cut would be also good and necessary at this point. And then we have the interest rate decision coming from the ECB, which is the European Central Bank. They are expected to keep rates unchanged, but it all depends on the CPI numbers coming the day before, which is Wednesday. All right, so then on Thursday, after we finish with UK and Euro, or the Eurozone, we move to the US, closer to the US session. We will have the core CPI, we will have the CPI numbers for the month of November, and we will have the initial jobless claims coming from the US. As well as that, we will have the Philadelphia Fed Manufacturing Index. That's another high impact data point. And we have the ECB press conference during the New York session. So we'll wait and see. And but I believe that they will not cut rates. ECB will not cut rates. UK or Bank of England will cut 25 basis points as expected. And let's see how the NFP comes. If the NFP comes very hot, this would delay the rate cuts that they're expecting in 2026 and even 2027. So we are done with Thursday, we are done with Tuesday, Wednesday, and Thursday. Let's now move to Friday. We have the interest rate decision coming from the Bank of Japan. So this week is packed with interest rate decisions. The previous reading was 0.5%. The interest rate is 0.5% in Japan. There was some talk that they will be raising rates, but after the latest readings of the inflation and GDP in Japan, I doubt that they will raise rates. I think they will keep them as is. And then we have the Fed's favorite inflation gauge, which is the PCE. We have the core PCE and the PCE numbers coming out on Friday, which will draw the rest of the picture. We will see how the jobs market is doing after the NFP release and after the unemployment data gets released. And we will see the CPI, so the consumer price index, and then we will move to the PCE, and we will like have the full picture on Friday. After we have all these releases in front of us, we will see how the Fed would move forward. Are they going to cut rates? Are they going to keep it as is? And we'll see how the markets will react according to that. Okay. And then finally on Friday we have the existing home sales. That's pretty much it for the economic calendar. Usually I ask if you guys have any questions, but again, for those of you who didn't catch it at the beginning, this is recorded, so unfortunately this time I will not be able to take questions, but you can write them in the comment section below and I'll make sure to go through them and answer them one by one. Now it's time to move to the charts. Okay, so we start with, as always, we start with the DXY, which is the dollar index. Let's see the weekly. What did the weekly do? Okay, so the weekly closed very bearish. Like it's like the candles are trending down, closing below last week's low. Also the daily, like it hit this line and it got rejected. So the daily closed below the 126-day moving average, which is a bearish sign, and we expect to see it below 98, which is around 97.70 as a first stop, and then we'll retest those lows of 96.80 or even lower, 96.5. It makes sense because now the Fed is cutting rates, and they cut rates last week, and they're expected to cut rates even further in 2026 and 2027. So that's why we saw this reaction. It all started with the jobs market weakness. Market started pricing in a drop in rates because to boost the economy and boost the jobs market. So the sell-off started days before the actual interest rate decision. And on the day of interest rate decision, we saw it dropping hard after the markets confirmed that the Fed cut rates. Okay, so the DXY is trending lower, and it's expected to even deepen this correction. Um, Now let's move to Euro, which is the exact opposite chart. That's an inverted chart of the DXY. So it only makes sense that we see the candles, the weekly candles closing bullish. That's a very bullish close. We expect to see it retesting this level, which is 1.18. After 1.18, we move to 1.19. We might get rejections from here, but if not, if we break above, we're still going up and we're trending upwards as long as the DXY is dropping and losing value. That's for the weekly. We move to the daily. Yeah, the daily started making higher highs, higher lows, and it broke above this trend line, or that it was a tentative trend line, because like I expected it to trend lower, but it got rejected and broke above. So this is invalid. It got invalidated. So now we have higher highs, higher lows. We draw a trend line and we keep going up with it until proven otherwise. Okay, so that's for the daily on Euro. Yeah, also the 4 hours is trending um, beautifully. It's like very clean. We move now to GBP USD. Let's see how the weekly. Uh, that's the weekly. Okay, so yeah, we saw a correction here and then a rejection from the 50-day moving average, which is bullish. That's an engulfing candle. That's a bullish engulfing. And we're seeing those candles trending upwards, so they're making higher highs and higher lows, which means that we have a medium-term uptrend. Okay, you can see it clearly here. We have higher highs, higher lows, higher highs, higher lows. We're still okay, but it's facing a challenge now. The GBP is facing a challenge that is the 126-day moving average, which is the blue line here. It got rejected and closed below, so that's not very positive. And let's try to like align it with the fundamentals. We know that Bank of England will cut rates on December 18th, which is Thursday. So we might see weakness on GBP against the US dollar, because the US dollar already cut rates, the US already cut rates. Now it's UK's turn, and Bank of England might cut rates on Thursday. So if they do this, it will become less attractive for investors. So we will see some selling momentum on it. So this close here, that's what we get from the technicals. We saw a rejection from the 126-day moving average, and we saw a bearish closing on last Friday. So if we continue this weakness, it aligns perfectly with the Bank of England interest rate decision coming next, or this Thursday. Okay, so that's it for GBP USD. Some people would ask, like, how come the euro is expected to go up while the GBP is expected to go down? So that's the beauty of fundamentals. If you understand fundamentals and you understand economics, you understand that because the ECB, which is the European Central Bank, are not cutting rates, the euro remains more attractive. So when GBP or when Bank of England cuts the rates on GBP, it becomes less attractive. So it's very normal that we see two things, or two currencies against the US dollar, one of them going up and one of them going down, because US dollar is not the only factor affecting those movements. Like each currency has a whole economy behind it. So it depends. It depends on how, like, it depends on monetary policy. It depends on how the economy is doing, how the growth is, how the inflation is. So it all depends on the policymakers in each economy. So it's very normal that the analysis tells us euro is going up because and they're not cutting rates, and that GBP at the same time is going down, which doesn't make sense a lot unless you understand that they're cutting rates this week, and the UK's economy is struggling at the moment. So it makes sense that the GBP will drop while the euro will go up. Okay, so now that's it for the currencies. Let's move now to everyone's favorite, which is gold. Okay, so let me tell you a quick sad story. On Friday, I had sell limit on 300, 4,355. But like I had a sell limit, like a pretty good one with my stops above all-time highs. But what happened is it reached 54, so $1 away from my order, and then it dropped like crazy, as you can see here. But let's start with the weekly. The weekly closed very bullish. We're still bullish. Let's see the daily. The daily we had some rejection here, which might start a what's it called? A consolidation. So we might see that this is the first leg of the consolidation, the second leg, third leg, fourth, and fifth, and then we start going up again, which is the like triangle shape consolidation. So it might look something like this. So that's the first leg, the second leg, which is here, sorry. And then we have the fourth here, and then we see something like this. Okay, guys. So we might be forming a triangle. That was my theory on Friday. But if not, if it breaks above this high, then no, we're moving upwards. We're moving to new all-time highs. We might be targeting 4,700 and even more. As a first target, I targeted 4,500 by taking this trade, and 560 to be specific. And then after that, the second target is 4,700. But anything could happen, and we might be seeing the gold doing this, which is a consolidation. So if that happens, that would be a great money-making opportunity, because we will have a wide range to be taking swings inside of, I mean. So we might be moving all the way down to 4,100, and then move back up somewhere around 300, and then move down again to early hundreds, and then start moving upwards towards a new all-time high. So that's the, let's call it the medium-term analysis. It's not a long-term analysis. Long-term analysis is that gold is going up and breaking a new all-time high. But as of now, all we can see is this. So let's see what happened on this level, which I had marked out and I placed a sell limit on, which is the 55. It didn't reach 55, it reached 54 on my broker, and on most brokers actually, not my broker. And then it dropped heavily. So we might see a correction on market open towards 320, and then a correction towards the early 200s. If you have any questions regarding this analysis, again, I'm reminding you, throw it or drop it in the comment section below, and I'll make sure to answer it. But for now, it's still an uptrend. I wouldn't be selling unless it's like a very clear selling point. So here it was clear, and my stop loss was very tight, which is above the all-time high, because we got very close to the all-time high on Friday. And my targets are around here, so 170 and then 120. So it made sense for me to short, but unfortunately it didn't get filled, sorry. So that's what happened. I expect gold to continue this consolidation. To be honest, I'm not sure if it's going to break an all-time high before year end. I think we might be doing this, which is the consolidation I was telling you about. So that's it for gold. Let's finally take a quick look on the NASDAQ, because NASDAQ last week or on Friday lost so much because of a company called Broadcom. They lost 11%, and like it took everything else down with it. Like Nvidia lost 3% or even slightly above 3% on Friday alone, which caused the Nasdaq 100 to close bearish. Although the Dow Jones closed positively and made a new all-time high last week, but the US 100, which is the Nasdaq, closed bearish only for the fact of um, you know how they were talking about the AI bubble, that it's going to burst soon. Um, those like nerves came back. Those questions are back in the game after seeing what happened on Friday, especially with Broadcom. So all the chip making space got affected. Mainly, also Nvidia lost 3%, which is not a small percentage of a company this big. So it drove the whole index with it to the downward, to the downside, sorry. And the same happened with the S&P. So we might be seeing the start of a correction, but for me, I'd stay with the trend because the trend is your friend, and I would be longing the Nasdaq until we see a new all-time high, unless proven otherwise. All right, guys. So thank you for tuning in. This was it for today. I hope it was helpful. Beware of high volatility and thin liquidity. I can't stress it enough. Um, um, I hope that it was helpful to you guys, although it was not live. But I really had something to do at the time of the session. I don't want you to just like fly blind, so that's why I decided to actually record it for you guys to prepare you for the week ahead, as you got used to. So take care of yourselves, and as always, trade responsibly and trade in. Bye bye.